we focused on AI and semiconductor stocks all year. And a lot of the companies that we cover have a lot of revenue exposure to China. For example, Apple has almost 20% of their revenue coming from China, AMD over 20%, Nvidia anywhere from 20 to 25% of their data center revenue comes from China, Qualcomm almost 2/3 of their revenue comes from China. And because we never really talk about that too much in our videos, I thought we would wrap up a lot of our research on it in one special podcast episode.
China's probably been mentioned on every single earnings call, either by the person doing the presentation or if not, by the person asking a question. It's on everyone's lips at the moment.
Yeah, so it's an important part of the story. So there are 4 key topics that we're going to talk about today. The first is Warren Buffett's sale of TSMC late last year. He bought $4.1 billion worth of TSMC stock, only to sell it a few weeks later. And the trend that has resulted from that in 2023, with Wall Street analysts dumping TSMC stock en masse and then buying ASML stock or other semiconductors to replace TSMC in their portfolios. The second topic we're going to cover is the fact that the US has put 5 rounds of sanctions on China in 4 years around semiconductors and advanced AI chips and advanced AI chip making technologies and what that could mean for the future of the companies we cover. The third topic is actually a Chinese-made 7-nanometer chip. A Chinese smartphone company named Huawei recently released their Mate 60 Pro, which included a 7-nanometer chip that powers it. And that 7-nanometer chip should have been impossible to make given all of the technologies that are sanctioned to China. So how do they make this chip, and what does a Chinese semiconductor supply chain mean for the future of Western semiconductor companies? And the fourth is Xi Jinping's recent visit to the US, where he actually spoke to the CEOs of a lot of these companies, including Tesla, Apple, Larry Fink from BlackRock, and what that means for the story going forward between US and China relations, these sanctions, AI chips. So your time is valuable. So let's get right into it.
So we're going to take these 4 topics one by one, tackle each one, understand what's happening currently, the future, and see what it means for investors. So topic number 1, Alex, is around Warren Buffett, right? There was a lot of news coverage when he first made this purchase of TSMC stock. It was a big purchase of, I think, around $4 billion worth of the stock in 2022. It seems a long time ago, in Q3. And then literally just a few weeks after that, he sold the whole stock as well. So during the last few years, we've seen a trend developing where TSMC is a stock that people are worried about. We have had some details from Warren Buffett explaining why he made this sale, and it's all to do with the tensions between China and Taiwan specifically, which is where TSMC is headquartered. There's been attempts to kind of diversify. TSMC are opening fabs in the US. The real question is, should we be concerned about TSMC? Like, a lot of people are holding TSMC. Maybe they might not be aware. It's been a favorite stock of the last few years, but is that shine coming off? And is now the time for people to reassess TSMC and maybe sell it? What do you think?
Yeah, so there's a lot of crazy pieces to that story that we should probably cover one by one, right? The first is Warren Buffett buys any stock just to sell it a few weeks later. I thought that was actually the craziest part of the story. That's very unlike him. Warren Buffett is definitely the kind of person who makes big moves, holds them for years, and then always finds the best time to cash out, making his shareholders very happy in the process. And what I think actually happened is Berkshire Hathaway has slowly become more of a tech holding company, right? For example, more than half of his current portfolio is in Apple. So I think what he was trying to do was say, hey, I'm doubling down on my bet in Apple, but I'm going to diversify down the supply chain. Apple designs all these chips, they design the products, and then TSMC builds the chips that power them. And then I think what happened a few weeks later is he was like, hey, this is a good bet on paper, but now analyzing the actual geopolitical tension, I'm nervous that I'm actually exposing us to a new risk by doing that instead of just buying more Apple stock. That's my guess.
Yeah. I think you're spot on. He basically said he loves the company. He was just uncomfortable with the geopolitics around this.
Berkshire bought a substantial position in Taiwan Semiconductor and, contrary to its normal holding timeline, sold almost the entire position within a few short months. While you cited in a CNBC interview that geopolitical issues were the catalyst, these issues were seemingly no different when you acquired that stock. So what else, if anything, changed in those few months and prompted the firm to offload close to $5 billion worth of Taiwan Semiconductor shares?
Taiwan Semiconductor is one of the best managed companies and important companies in the world. And there is not, and I think you'll be able to say the same thing 5 or 10 or 20 years from now. I don't like its location, and I've reevaluated that. Marvelous people and marvelous competitive position and everything. I'd rather find it in the United States. I feel better about the capital that we've got deployed in Japan than in Taiwan. I wish it weren't so, but I think that's a reality, and I've reevaluated that in the light of certain things that were going on.
The world moved so fast this year, it's hard to think back to that time. But a year ago, before ChatGPT, right, we were talking not just about AI, we were talking about China and Taiwan and the growing tensions there. So he became uncomfortable, and he said up front, he goes, he knows he won't find a TSMC in the US.
Which implies he doesn't think Intel is that company, right?
Yeah,
that's the big read between the lines there is he's not going to go and turn around and take his TSMC money and drop it in Intel just because they're the US equivalent, big air quotes, right? But the real reason we're talking about it now, over a year later, is because in 2023, there's been this big trend of dumping Taiwanese stocks in general, TSMC very specifically, and trying to diversify portfolios with other parts of the chip supply chain, if you can even really diversify away that risk at all. Because TSMC makes over 50% of all of the world's chips and over 90% of all of the most advanced chips, like the ones that go into our computers and cell phones and data centers. So for example, ASML is one that analysts and investors seem to really like picking up instead of TSMC. And the big point that I want to bring to the table is ASML has a very high customer concentration. I'm not exactly sure what it is this year, but as of last year, 80% of their revenue really comes from their top 5 clients. TSMC, I think, is one of their biggest. And then the others are, of course, going to be companies like Intel and Samsung. But ASML is still subject to a lot of the Chinese economic sanctions that we're seeing, even though they may not be subject to the same military tension. So I'm not sure that this is a good play to diversify away from all of the risks of China. You're just sort of trading one risk, the hot war risk, for another risk, the sanction risk, because that's going to hit ASML just as hard, which we've seen with the sanctions on their EUV machines, and then the next round of sanctions with the DUV machines, right? So what do you think? Is it actually a good idea?
My thoughts are it's a really strange trend. So we picked up on this because we saw it mentioned by a number of like news outlets across the world who are talking about this as a trend or preferring ASML over TSMC. And I mean, actually, there's a few lessons for investors here, really. So the first thing we can talk about is the concentration of risk. Yes, you may have gone from a Taiwanese-based company to a Dutch company, but they're directly linked. It's like ASML's machines enable manufacturing of these high-end chips. And you just said, and correctly, like 90% of the high-end chips are manufactured in Taiwan, right? So even if we rewind a little bit around Warren Buffett, if you're already massively invested in Apple, mostly everything Apple produces is through TSMC. It's a strange decision to then also invest in TSMC as well. You've got a lot of concentration of risk around that. Now, obviously, Apple's the biggest company in the world by market cap, so it's probably a pretty safe bet, but it's that concentration of risk. I think it might come down to people not really understanding how they're directly linked. ASML and TSMC are directly linked, like you said, from a supply chain point of view. Let's say that there's a sudden downturn in chips for whatever reason. I don't know why. The world runs out of silicon or something crazy. That's going to directly impact Apple, ASML, and TSMC. It doesn't make sense. If you wanted to really kind of diversify away from it, go to another big technology company that doesn't have the semiconductor exposure and that are in something completely different.
I think the other angle on that is TSMC makes chips for a lot more than Apple. So this is, in my opinion, one of those like absolute Armageddon situations. Yeah. If China actually destroys TSMC's foundries and the other foundries on Taiwan, it's not just your portfolio returns that are going to suffer. Technology as we know it will fundamentally change. The world would be in much worse shape if something actually happened to TSMC. And I think that's just a really big global systemic risk that people should be aware of. I'm not sure it's the kind of risk that you can actually diversify away from unless you just diversify away from tech completely. My stance on this has always been This is just a fact in the world that people will have to deal with and decide whether that's a risk that's acceptable to invest against or not. But there's no clever strategy to get around it, in my opinion.
Sure.
So given all that, would you invest in TSMC today?
I would say yes, I would buy more TSMC right now. If you think about all of the big announcements from the companies like Nvidia and AMD in terms of the new chips, all this new demand, that's only being produced by one company at the moment, and that is TSMC. So all of the advanced chips are coming out of there. TSMC, as we know, have got a very aggressive roadmap about moving to more and more advanced chips, like to 3 nanometer, 2 nanometer and beyond. So yes, I would. To me, TSMC is a much of a leader in the fabrication of chips as Nvidia is in terms of the AI data center right now. I think they're way out ahead. This is an opportunity to buy more if there is a little bit of a doubt around them. And I think, yeah, they're here to stay for the long term.
And then the way to play around this risk is you just over or underweight your exposure to TSMC depending on how you really feel about the geopolitical situation. Maybe you decide to move a little more upstream, invest more in Apple and Nvidia, the people who take TSMC's chips and make products that get powered by them. Or if you think it's less of a risk and you care about owning that part of the chip supply chain, then you would just keep investing in TSMC normally, depending on where it already is in your portfolio.
Let's move on to the second topic. So the next one is all around US sanctions. On the 17th of October, we had the US Department of Commerce announced its plans to block sales of AI chips to China in the coming weeks. This might sound familiar because they'd already blocked chips sales to China for AI chips previously. These sanctions were to close some loopholes that were there in the previous sanctions to make things even tighter. If we take Nvidia as an example, Nvidia had their flagship A100s and H100s, these data center GPUs, and previously restrictions had come in around China. And based on that, what Nvidia did was slow down these chips and make China-specific chips that got around the sanctions, were compliant, let's say. And so that was the A800 and the H800. And the way they did that was basically slowing down the chips so that they were within the threshold to be able to be sold to China. Now what happens is the US government looked at this again, and they've now made the restrictions more strict. And so now NVIDIA's A800s and H800s are also banned, and they're part of the ban, as well as their RTX 4090 GPUs, which is a consumer GPU product. So these are now tighter restrictions. It's going to affect NVIDIA directly. We know about it because they've already talked about it. They had their earnings just last week. And for NVIDIA, China accounts for 20 to 25% of all of their revenue in the data center business. That's the backdrop. Now, NVIDIA are interesting in terms of their approach. They're forecasting a major drop, significant impact to their revenue. They believe that the demand from the other regions is going to offset that. So is that just wishful thinking for NVIDIA? Does that sound realistic? Should investors be worried?
I think it's definitely bad news, but with a big silver lining, right? The bad news is obviously, look, a significant portion of our revenue is going to get hit due to the way the new sanctions are structured. We can't just slow down chips anymore and keep selling them to China, but it's making their revenue more reliable in the long term because obviously the revenue from the other regions aren't subject to the same sanctions. And I'm happy as an investor taking short-term growing pains to get there.
Yeah, makes sense. And it will all come down to what their demand is, right? I think the next quarterly earnings report will be really interesting. I mean, it's kind of funny. It sounds so logical, right? We're down 20 to 25% revenue from one geopolitical area, one area, China. But don't worry, we're making up for it elsewhere. But if you think about the amount of money, we're talking like billions of dollars. So there's billions of dollars gap in their revenue, and they think they can cover it elsewhere in one quarter. It's still kind of mind-blowing numbers.
I think this couldn't have come at a better time for NVIDIA, right? NVIDIA is a runaway train. They're in a market of one. Everyone is scrambling to catch up to them. And they're comping against really bad quarters a year ago, right? We just released our video on their earnings at the time of this recording, about a week after their quarter three earnings. And what we're seeing is they're having triple digit year over year growth, but that's because a year ago, NVIDIA was actually underperforming, right? So next quarter and the quarter after that are still comping against bad quarters from a year ago. So a lot of this negative revenue growth, at least in China, is going to get buried in much bigger positive numbers, I think. So if this happened to them a year ago, in addition to those bad quarters, we would be having a completely different conversation around NVIDIA.
And it'll be interesting to see what happens with Intel and AMD, right? AMD are about to release their MI300 as well between now and the end of the year. I think it's on the 6th of December. So in the coming weeks, Intel and AMD are going to be talking about their chips, their high-end AI chips, which will also be subject to these same regulations as well. Let's take AMD, MI300 launch. Is Lisa Su going to be launching one data center GPU, or is it going to be, oh, and by the way, here's the Chinese version as well. So
Yeah.
I guess we'll find out in the next few
Yeah,
days
the
and weeks.
MI300 and the MI800. This is probably a peek into the way we do our research, but that kind of stuff is really useful for us to look at too, because what happens is this is a huge chunk of Nvidia's revenue, right? Because they make such advanced chips. This is a sanction focused on fast AI chips. So when Intel and AMD don't get hit as hard by these sanctions, it sounds great at first, right? Hey, Nvidia's getting hit with all these sanctions, while AMD and Intel don't really suffer from them. But if you read between the lines, what that really means is how much more advanced Nvidia's chips are, that they qualify for these sanctions, while AMD's and Intel's products tend not to be of worry or of any concern that the United States isn't worried about sanctioning them or China getting their hands on them, right? A lot of when we think about the performance of these chips and how far ahead Nvidia is, this is one measure of that, how much more affected they are by these advanced AI chip sanctions.
Absolutely. And that's talking of advanced chips. Our next topic is all around mobile phone chips that require the most advanced equipment, are actually going into mobile devices. So one thing that surprised the world a few months ago, Chinese maker Huawei launching the Huawei Mate 60, which contained a chip, the Kirin 9000S, which was actually a 7 nanometer chip, which should have been impossible. So based on the restrictions that had been put in for years around China, the fact that they can't get access to EUV, most advanced machines, that should limit them. They shouldn't have been able to produce a chip that was at 7 nanometer size, which is pretty advanced. To be fair, it's still a few years behind where we are in terms of what TSMC can produce, but it was still more advanced than we were expecting. And the way they've done that is quite interesting. So they've actually taken the DUV machines, which stand for deep ultraviolet, so not as advanced as the EUV, but they've taken the DUV machines. And by using a clever mechanism, I mean, my basic understanding of it was you print the chip twice, right? So you kind of do it once and then you go over it again with on the same transfer, you print the chip again in a different orientation and you're able to produce a much smaller feature. So by coming up with this kind of workaround, they were able to produce this chip, which should have been impossible. And it led to some really interesting commentary, right? You had people in the US kind of freaking out a little bit, like, how have they done this? How is this even possible? You had people then raising the question that is this going to lead to a China chip boom in terms of their ability to produce more chips? Yeah, I'd love to get your thoughts on what was your reaction in terms of them being able to produce this chip, and where do you think we go from here?
I do think that we are encouraging a chip boom in China, and this is the first fruit of probably many that'll come from that. My big question is around the scale, right? Okay, so SMIC builds enough of these chips for Huawei's flagship phone, the Mate 60. Is that it? So what does this mean for the Chinese chip market overall? I don't know. Are we about to see 5 nanometer AI chips from China? Are we about to see a Chinese flagship smartphone boom where now they have a lot of competitive smartphones to Apple and to Google's Pixel, to Samsung's phones? And what does this mean for the laptop market, the desktop market? There's a lot more than just cell phone systems on chips to worry about. So I'm cautiously optimistic that it's going to take a long time for them to ramp up production for a wide variety of advanced chips. And again, like you said, 7 nanometer is not the state of the art. It's about 4 or 5 years behind the state of the art as TSMC pushes towards 2 nanometer at scale. So semiconductor supply chains take a long time to get going. As we've seen with TSMC's foundries that they're trying to build in the US, those are years away from producing at scale. And even when they do, it'll be a fraction of the scale of the chips that they produce in Taiwan. So this is something that's going to take China a long time to ramp. What about you? What do you think about it?
Yeah, no, I agree. And I think you hit the nail on the head when you talked about scale. Because when I read this news, I was like, oh, if you can create these 7 nanometer chips using these DUV machines, why is not everyone doing it? And it turns out it's all to do with the yield. Like, how many of these chips do you have to throw away? And apparently the yield is quite low, like almost 50% when you're using this method. So It doesn't scale very well. It's not really. So maybe it's interesting. Has it been done as a one-off? I feel like it may have been to prove that they can do it and at least have one chip. But I think going from that to something that is sustainable, where you're making profit and it's something you can continue to do at scale. Two very different things. You need to build them. You need the talent, you need the resources, you need the natural materials, you need the right process, you need to be excellent at that. But then at the end of it, you have to do that for the right price point as well. So it's just like almost just by the fact that you are trying to do this in certain countries is a major impact as well. So it's impressive that they've done it. I will definitely be keeping an eye on SMIC. I'm sure it caught the eye of some people in Washington. I'm sure there'll be even stricter restrictions around these chips. Maybe some of what we've just seen might have been in response to this phone. It's certainly got people talking, but yeah, can they scale it? Can they really scale it?
Yeah, and I think scale is just one dimension, but one of the other strong points that you just made that I agree with is flexibility, right? One of the things that TSMC does for all of its clients is adapt processes just to them. So for example, Nvidia's chips have a different 4 nanometer process than Apple's chips, right? Because they're different applications, they're for different markets, cell phones versus data centers. So SMIC needs to be able to do that too, not just make one 7 nanometer cell phone chip, but if they want to ramp up their own data center chip supply chain, now that process needs to be adapted to a whole different application. It's an open question whether that DUV based print the chip twice process can be as flexible in doing that. So not just scaling in one vertical, but being adapted to other verticals as well. My point is flexibility, scale, and I'm sure there are many other directions and dimensions about the process that people should be caring about, none of which have been proven out.
Yeah, and it's hard for us even to research this topic because it's hard to separate the spin from the actual facts as well. So I think this is one of those wait and see stories really for us. Time will tell. We'll keep an eye on that one.
Time will tell.
So the last topic we wanted to cover was really around President Xi Jinping visiting the US and spending time with some of the biggest CEOs in American business, as well as spending time with President
in the world.
Yeah,
right?
literally the world. Yeah. So we want to talk about what happened in that visit and also how do we think that impacts the other items we've just spoken about. So he came to America, he met an A-list of CEOs. We had Larry Fink, we had Tim Cook, Elon Musk, Mark Benioff, and not to mention many others. And he spent time talking to them to try and improve the relationships really between US companies or big tech companies and China. And I'll just read one of the quotes that he mentioned. So he said, the number one question for us, are we adversaries or partners? And then he asked, if one sees the other side as a primary competitor, the most consequential geopolitical challenge, and a pacing threat, it will only lead to misinformed policy making, misguided actions, and unwanted results. So that was a direct quote from him. So I think he used some of these terms deliberately, like primary competitor and a pacing threat. He used specific terms that President Biden had used previously to talk about China. So he's really sort of saying, look, if you're going to kind of keep us at arm's length and try to see us as just a threat, it's not going to work for anyone. And there will be unwanted results, etc. So I think it was like an open call to try and work together a little bit better. So what did you think of that move and his visit to the US?
I always think it's so interesting because the relationship between the US and China is obviously very complicated, and I won't pretend to be an expert in it. What I will say is it's not one or the other. It's not you're a competitor or you're a friend or an ally. For example, much of our supply chain for goods depends on Chinese manufacturing. Right? At the same time, there's certainly many areas where we're adversaries. And I think what Xi Jinping is really focusing on now is increasing the quality of life of his domestic population. He cares about Chinese prosperity. And so he wants to achieve that. And I think what this meeting says is, hey, I'm willing to open the discussions and play ball in many different facets of our relationship. But I think overall, not much progress got made just from that one visit. It's sort of the opening of the channel, not the closing of an entire chapter of the American-Chinese adversarial relationship. What do you think about Xi Jinping's visit? Does it change any of the other things we've talked about today?
So if I try and think about the relationship between the US and China, let's compare it and contrast it with Russia just for a moment, right?
Sure.
So if you think about that, is you get to a relationship where it's getting worse, further and further apart, breakdown in like communications. And then you look at China and the US, it's not rosy, it's not like amazing, but it seems to be like, it's not getting worse. It seems to be improving. And I think sometimes people might have a really simplistic view of the world in terms of, okay, China's a competitor, they're producing goods cheaper versus the US, but the world's more complex. We opened up this podcast by talking about the amount of revenue massive US companies are making from the Chinese market, right? So
Right.
19% of Apple's revenue came from China. That's selling goods there as well. So there is a symbiotic relationship between these two countries, right? And I think it's good that the two countries are at least speaking together and moving forward at least. And it feels like there's more to come here. It's tricky because in the same press release that was talking about this new collaboration, the same press release highlighted that there's still divisions, for example, around Taiwan. China still sees Taiwan as part of its one China group and view of the world, whereas the US see it as an independent kind of country. It's one of these like complex modern day relationships where they're a frenemy in a way, and they're also a big consumer as well as a supplier all at the same time.
Yeah, and I think the point that we're trying to make with this episode of the podcast specifically, and why we almost never cover the China risk in any of our videos, is because this is a huge, complex, ongoing topic that you just have to either decide I'm going to invest through it, or I'm not willing to stomach this risk. I'm avoiding companies with a large exposure to Chinese revenue. I think the type of companies I'm glad we covered this year, the Apples, the Microsofts, the Nvidias, the AMDs of the world, the TSMCs, these are companies that are making devices, that are making products and services that are changing the world, China included. It would be a mistake, in my opinion, to just make one bucket of stocks that work with China and one that don't, say China bad, and then never invest in that first bucket, because those are all the companies that got the best returns with the lowest risk today. So hopefully this episode at least showed people what our stance is on some of these events that are focused on Chinese and US relations, how they're impacting the companies we talk about often, why we don't talk about it in the channel. We are not experts on this topic at all. We have a very surface level view, but other than that, our focus here is just to invest in companies that are changing the world, China included. So this is our chance to open the discussion on that too. We thought this would be a great episode that gives you a sneak peek of behind the scenes and how we think about these kind of things.
Yeah, let us know what you guys think in the comments as well. We'd love to get your thoughts, and we read every comment. So yeah.
Yeah. And thanks for all the wonderful feedback on the first two episodes. Until next time, this is ticker symbol U. My name is Alex, and I'm joined by Arif, reminding you that the best investment you can make is in you.